Well, welcome back, everyone. It has been an incredible week in markets. Let's review. We had a start to the week where we gapped up. That was from Sunday night into Monday morning on the U.S. and Eurozone trade deal. We did have a Fed that did not give us some positive reinforcement that folks were looking for on Wednesday for a rate cut in September, but Microsoft and Meta pulled us up. We did open up and move higher on Thursday morning to create those new all-time highs for the ES, getting up to the 64, 68 and a half territory, for the NQ or the NASDAQ E-minis getting up to 23,845. An incredible feat in and of itself. However, the market was not able to sustain that kind of positioning. And as the day really started, we started selling down on Thursday. Apple and Amazon didn't impress after the bell. And first thing on Friday morning, we got jobs data that came in weaker than the consensus estimate and a massive revision to the prior month downwards. Now, this sent shockwaves through the market in the bond universe, and it started to weaken the dollar dramatically, pumping up the euro dramatically, and you can see that turn up. And we got a marketplace that was now pricing back in a rate cut in September, but it was a little too little, a little too late. Nonetheless, amazing trading opportunities were created, especially over the last couple of days in markets, mainly to the short side. And the hardest part of getting in at the right time is identifying the right time. So I'm going to take you over to my technical toolkit here on WealthCharts, and we're going to take a look at the selling that started on the 31st midday, taking us down into the end of the day. And in the after hours, we didn't see, on Thursday, the Apple and Amazon earnings do anything great to futures. We, in fact, came down and made lower lows. But as we moved towards the open on Friday morning, we were rising. At what point did we know that we were likely to come down and make the next leg of this two-day sell-off that we've seen in the market? Well, right over there at the hard right edge of the screen at 9:05 a.m. Eastern Time, we got a champion trend sell zone signal. We got the champion cross sell zone with the dot at the bottom of the main chart. And we got the triple S indicator leading into that, telling us that the triple S line, which is in the subchart here, wants to move from the uppermost quadrant down towards really the bottom of that 4-quadrant channel. It took a while to knock on the door at the median of the channel, but we did come down with very much vigor, and that happened really right there at the open of trade on Friday. We had a wealth signal, a triple S sell, a breakout forecaster. We went directly into an accelerative down move with breakout forecaster after breakout forecaster coming down to make lower lows. In fact, that move was roughly from the 63.10 area on the S&P E-minis down to the 62.40 area. About a 65 to 70 point move signaled in advance that we were likely going to come down. An incredibly powerful set of signals that helped traders play on the short side, inclusive of myself. Now, as the speed lines crossed over, we had a counter trend bounce. We pulled back again in that sell zone and back down. We locked in a little bit of a positive divergence. We pushed back up again, and we started to see the market try to actually get to a point where it can repair things. However, the sell signal came in on chart again right over there at 12:55 p.m. Eastern Time, and it was aggressive. It was also preceded by the triple S indicator coming down from quadrant 4 into quadrant 3, crossing its fast momentum line, and then crossing down below the center line of the channel. And we had this accelerative move down. Catching the move somewhere in this territory around the 62.80 area gave the opportunity to traders to trade short all the way down to the 62.40 area. Another incredible 40 points of potential trading gains for those who are playing on the short side, which was predominantly how I traded live in front of members in the active trader room and on WealthCharts, doing several profitable trades in front of them along that way down. Now, the question mark is going to be, where is this market going overall? And what I can offer up to you is that we've got a lot of negative momentum, but a very oversold state. A slightly lower low down closer to the 62.20-ish area. a counter trend bounce up that could go as high as the 6350 area, and then a follow through again to the downside to potentially make lower lows. This would be very similar to the pattern that showed into the breakdown in the back end of February of this year before we went down for the count into Liberation Day. So a very similar proxy looking at February the 20th onwards to gauge what may be likely in front of us over the next several days of the week ahead. And in the front half of the week, my expectation is that there's going to be some pressure, but an oversold condition can get more oversold. Typically off of all-time highs, we would get an oversold bounce. And after that bounce plays itself out, that negative energy is now installed writ large. It very likely comes down again, and we potentially see this market get below the 6,200 area, potentially coming down into the 6,100 area to the 6,000 area for the overall move. And this is something that we've mentioned to members in the active trader room for quite some time. We had a big picture forecast inked in late May, early June, where we suggested that the market is likely going to start arcing as we move towards the end of July after making new all-time highs, and then potentially succumb to a 4 to 8% correction. Well, we've already had a 4% move on the NASI from the very tippy top of the highs all the way down to the lows. Just about a 4.5% move has already played out. Is this likely to continue? Well, oversold bounce and then a move back down is effectively what I'm looking for. I hope that this has been a valuable video for you. Stay safe out there. The market energy is still tilted negative. It has not yet fully been expunged, and lower lows may potentially be in front of us. Stay safe out there, folks. Thanks for watching. Looking forward to seeing you in the next video to keep you abreast of my thoughts on the market move. Have a great rest of your day.